Yeah, so even though, a budget can seem like more of a short-term solution, it really does have long-term impacts if you think of it the right way. You should really think of it as a financial tool rather than just a checklist item that you have to do.
Hello, and welcome to another episode of It Depends, a podcast series brought to you by Hantzmon Wiebel. You know that if you've ever talked to an accountant, they've told you, well, it depends. This podcast series is for business owners, leaders, operators, accountants, or someone just wanting to learn more about the accounting industry. I'm your host, Clarissa Hoffman. We are joined today again by Chapman Yoder, an FP&A analyst in our advisory department. Thanks for joining us, Chapman.
Of course, happy to be here. Thanks for inviting me back.
Yeah, thanks for coming back. So today we're talking about spring cleaning, specifically in regards to your financials. Part of that is kind of a midpoint or a mid-year budget check-in. Why is that so important?
Yeah, so the springtime is a great time just to take a step back and really assess kind of how you've been performing, how your business has been performing for the first couple months of the year, specifically in relation and in comparison to your budget. Through the spring, a lot of times companies will create their budget at the end of Q4, the prior year, or in the very beginning of the current year. In the spring, a lot of times there's already been market changes, there's been headcount changes, revenue trends that have already shifted against kind of what you're expecting. So it's a good time to reassess how you're doing and make adjustments before it's too late.
Are there any particular challenges that clients face around mid-year budgeting?
I think probably the biggest challenge is just the inertia of getting yourself to compare your performance against the budget. Setting that meeting, I know business owners get super busy, and a lot of times the budget just kind of gets pushed off into the files and not looked at until the end of the year. So really getting those mid-year meetings down, and it really helps you be proactive throughout the year rather than looking in the hindsight at the end of the year when a lot of times it's too late and you have to deal with what you got. So really making it a point to meet early in the year helps you just be proactive and ready for what's coming ahead.
How would you define financial cleanup in this context?
So in this context, it's not necessarily about specifically accounting cleanup that we often think about. It's more of resetting your financial lens and your financial goals. It's looking at whether or not your projections are really panning out, and if not, then you need to reassess your assumptions going forward, your budget expectations. So it's not necessarily cleaning up the kind of technical data, it's more of strategic cleanup that you're really looking for.
So a refocus for the remainder of the year.
Right, refocus, yep.
What are some common mistakes that you see?
A lot of times people think about the budget and just think about the financial aspects and the dollar amounts and not tying the operational aspects to it as well. The big thing that comes to mind is payroll and headcount. When businesses are hiring people or people leave the company, that's obviously going to have a big impact on the payroll expenses. And for a lot of businesses, the payroll expense is their number one expense item. So it's going to have a huge impact on the bottom line. And so not thinking about the operational data when it comes to developing the budget numbers and really making sure those align, I think is something that goes often missed. Another misconception or issue I see is having overconfidence in your first projections. Obviously, you want to be confident in the numbers that you provide in the beginning of the year, but you don't want to place all your chips in those projections panning out first try. We all know that 99% of the time, that's not how it's going to go. So you got to be willing to adjust and willing to look at your performance from an objective view and being willing to make changes when changes are necessary. Another common mistake is people really like to focus their attention on the P&L. I think the P&L is certainly probably the most fun to focus on, but a lot of times it ignores the cash flow implications directly. If your sales collections are really lagging behind your inventory payments, your purchase payments, that's obviously going to bring in some different liquidity issues. So focus on the cash flow and your cash position as well as your net income and your margins is super important and often goes missed.
Are there examples of a client who has done this well?
Yeah, so there's a client that we've been meeting with for 2 years now. We love working with them. We help them set up a budget for the upcoming fiscal year, and on a monthly basis, we meet with them. We look over their budget, and after a few months, we kind of realized that their inventory costs have been creeping up a little bit. Because we had been meeting with them on a consistent monthly basis, we were able to point this out and make the changes so they were actually able to go to a lot of their vendors and negotiate terms and really get a promotional kind of strategy and partnership going. So by noticing those changes early, we're able to really combat those rising prices and get them back on track for the beginning of the year.
Is there a myth that you'd like to clear up about all this?
One myth that I love to clear up is that a budget is a once a year thing. It's not. It should be a living document. You should be willing to adjust, make necessary adjustments, and really compare yourself against the budget on a continual basis. I like to say a monthly basis, but quarterly is great. It's not a one-time thing where you shove it in a file somewhere and come back to it later. It should be a living document that really helps tell the story of your business as well as drive your goals.
What would be your first recommendation to a business owner who wants to improve in this area?
Obviously, first, if you don't have a budget, I would start right now, create a budget for the remaining year. But if you do, one thing I like to ask is, the whys. Comparing yourself against the budget, it's easy to look at what happened, but then to further that, you need to ask yourself, why did this happen, and what does this mean going forward? That's really going to give you the most value out of your budget rather than just having wins and losses. It's going to help you really strategize going forward and answer those questions that are important.
How do you approach budgeting for long-term success?
Yeah, so even though, a budget can seem like more of a short-term solution, it really does have long-term impacts if you think of it the right way. You should really think of it as a financial tool rather than just a checklist item that you have to do. It should really reflect your goals moving forward and what you want to achieve. And so, having a short-term budget that reflects your long-term goals is really going to drive success going forward. So don't think of it as something you have to do, but rather think of it as something you get to do and something that's going to improve your business.
So you're a few months into the year, maybe halfway into the year. What should leaders be thinking about now?
Yeah, I really like to start refining the forecast going forward because I like to say a good budget starts with a great revenue forecast. It's the top of the line for a reason. It's going to drive the rest of your P&L most likely. And so really looking at how you've performed on the sales side is going to point you in the right direction for how to handle the rest of your budget. So if you're a seasonal business, you can look at how you performed in the recent months compared to last year, and that will give you kind of a good indicator of maybe the demand going forward, but it's really going to align you in the big picture. Also, it's never too early to start thinking about tax planning and tax strategy at the end of the year. It creeps up a lot faster than you think. For example, if you have a big first quarter that you weren't expecting, a lot of sales coming in, most likely that's going to carry into taxable income at the end of the year. And you want to be planning for that and recognize that early because you don't want to get into November and December and realize that you have a ton of taxable income that you weren't expecting, and now you're just kind of scrambling, thinking about, what costs, how can you drive that down. So the earlier you can start thinking about that, the better it's going to be for you in the long term.
Are there any trends that are going to affect the future of budgeting and forecasting?
Absolutely, yeah. And I think it's really already here and it's certainly becoming more popular, which is real-time data and dashboards. Clients love visibility into their data at their fingertips, right? They want to be able to log in every day or check in every couple weeks and see how they're doing rather than just getting PDF financial statements at the end of the month or every quarter. They love those interactive dashboards. So with the advancement of a lot of business intelligence tools like Power BI or Giraffe, which is what we use, it allows them to access that data in real time rather than having to wait till the end of the period. So I think that financial dashboards and operational dashboards are becoming super popular, and we've seen that clients really love when we provide them. Another aspect that's really becoming super popular is scenario planning. So rather than just having one budget or projection going forward, having multiple scenarios that you can toggle with and see the outcomes really helps businesses be prepared for the future. And just the advancement of technology, the tools that we can use makes that a whole lot easier rather than having to set up a bunch of models in Excel. Giraffe, for example, what we use, it's super easy to have plan A, plan B, plan C all at your fingertips and accessible.
If someone's feeling overwhelmed by all of this, what would you tell them?
It can certainly be a very overwhelming thing, especially if you're a new business or if you never created a budget before. It can seem like a lot on your plate, and it is. So I would just tell them to break it down and do it in steps. Focus on specific things. I love to start with revenue. As I said before, I think it all starts with a good revenue projection. So, start with revenue, get that under your belt, and then move on from there. Don't think you have to do it all in one, swoop. Take your time and really break it down.
Do you have a favorite resource?
Absolutely, yeah. So for our FP&A services, we use a tool called Giraffe. We really love the tool, but also we love the team. They work with us, they work with our clients, and it provides those real-time dashboards that I was talking about, and it also provides just an easy way to do scenario analysis. So we found it super beneficial, and it's definitely one of our favorite tools that we use.
So if someone is listening and they are interested in some assistance, what is your recommendation?
Yeah, I mean, of course, there's a ton of tools out there, but if they're really interested in getting that first budget rolling or even want help just analyzing that budget on a month-to-month basis or really get some good tools to benefit them, I would obviously reach out to our CAST team. We would love to help them interpret their data, set up a budget, help them, understand their goals and even state their goals if they don't do that directly already. We would love to help build a plan that really fits their business.
Thank you so much for your time today, Chapman, and for providing our listeners with this useful information on budgeting.
Yeah, absolutely. I'm curious, what topic is next?
Well, it depends.